Hello, welcome to Inspired Caring. I'm your host, Michelle Magner. If you are caring for an older family member, this is the podcast for you. Each week, I bring insight, tips, inspiration, and strategies to help you care for the people that you love without losing yourself along the way. Having cared for both of my grandmothers, I've helped manage everything from hospital stays, households full of belongings, to navigating senior living and end-of-life care. And I've worked in senior living as a result of that experience, serving my residents and their families as they've been on this journey too. Thank you for joining me today, and I hope you enjoy this episode of Inspired Caring. Today on the podcast, we are going to talk about insurance, which can be a pretty complex, confusing issue. But we have Kristen Burke with us today, who is going to help explain a few things, especially the importance and value of having long-term care insurance. Kristen is with Meaningful Insurance Solutions. So welcome to the podcast.
Thank you, Michelle, and good afternoon. And I really appreciate you having me on the podcast here today. So there's just definitely a need, and I really am grateful, and your passion for helping caregivers out there is definitely needed. Finding resources and helping them along their way. That's definitely key, as especially more and more baby boomers are, turning 65, and it's great that with modern technology and medications and medicine and all of that, people are living longer, but that doesn't always mean that they're healthy, that most likely they need assistance and need help. So that's awesome what you're doing.
Well, thank you so much. And of course, we know that so many people who are turning 65 may also still be caring for their aging parents.
True.
And have young adults that they've launched into the world who may be circling back with grandkids. So there's just a lot of moving parts, and insurance is a really important big piece of the puzzle. Mm-hmm. When you do puzzles, do you do corner pieces and then go around? Do you do puzzles?
I do. I do. Yeah, I form the edge, the outside of it first, and then dive in. But I don't know. I kind of do a little bit of both, I guess, if you think about it. I haven't done a puzzle in a while, probably since COVID.
That was a heavy puzzle activity time in our house too.
Yeah.
Well, let's just talk, I guess, just broad scope. We know we're stepping into the busy season, the insurance season, and some changes have been made. So before we talk specifically about long-term care insurance, can you just share a little bit about what's happening with Medicare?
Yes, definitely. So it is going to have a lot of disruption here this annual enrollment period, which the annual enrollment period for Medicare Advantage and prescription drug plans is October 15th through December 7th. And this is a time period in which, if you are new into Medicare, you can look at plans to see what the plans are going to look like for next year. So it give you a glimpse, and that's the time in which you can enroll in those plans. What's happening this year is the Inflation Reduction Act has implemented some changes with the drug coverage. So they are capping the out-of-pocket expenses for an individual on their drug plan to $2,000. So
whoa, per year?
Per year.
There are people who are on one medication that's like $2,000 per month, right?
Right. Yeah. So it's definitely beneficial for those individuals that are on a lot of medications. They have the ability to also pay for those premiums, that out-of-pocket expense over the 12-month period of time too. So if they can't quite afford to pay all $2,000 up front, Medicare is now allowing them to spread that across that plan year. So those are the major changes. However, with that, we're just getting word of what the Medicare Advantage and the drug plans will look like for 2025. Being that they're capped for out-of-pocket expenses at $2,000. That sounds great to an individual. However, the money has to come from somewhere. So are the plans going to be, a higher premium? Are they going to have not so many, added value benefits? So there's a lot of questions of what the plans are going to look like. And so this AEP is more important than probably any other AEP in the past, that they're going to really need, each individual is going to need to review their plans, where they're currently at, and what that plan will look like for next year, and if they need to make some changes.
And what does AEP stand for?
That is the annual enrollment period for Medicare.
I was going to guess, but I thought that was risky.
Yeah, so.
Okay, so the 2,000 out of pocket does sound good when you think about it. I mistook that when you first said that. So that 2,000 max out of pocket sounds appealing, except that all of these other changes are happening and we're not exactly sure what's going to be covered, and is that correct?
Right. Yeah.
Okay.
It's and the drugs might fall into different tiers than they were previously. So there's we're just waiting to hear final approvals from CMS on the plans. So from the carriers, and then come October 1st, we can start setting appointments and getting in more depth with the clients in regards to what the plans will look like for next year. But enrollment itself doesn't start until October 15th.
So let's dive into long-term care insurance. And if you can just explain a little bit more to us about what that is.
Sure. Yeah. So long-term care insurance has been in the industry for a few decades now, and it's really evolved over time. So back in the day, it was strictly for nursing home, and it only provided insurance and coverage and assistance if you happen to be in a nursing home facility. I think carriers saw the need and how just everything had started to advance and change. People wanted to stay home as long as possible, to have a little bit more enjoyable experience, as they're aging and as they're needing care, than just going to a nursing home. The grandparents' version of a nursing home from way back in the day. So really now, long-term care insurance will provide you either a daily benefit amount or a monthly benefit amount towards those types of services. And they've really expanded that footprint to where it is for in-home care. So receiving, nurses, coming into your home multiple times a week, also in assisted living facilities or adult daycare, and then also a nursing home, memory care facilities, as well as hospice. So and they kind of left it open-ended too, because we don't know what care will look like in the future as well. So they want to make sure that that coverage that they're picking up a policy today will be flexible enough to assist them and help pay for those expenses when they're older. Now, also, when it comes to long-term care, it's evolved in the sense as well that in the past, it was just traditional long-term care. There's about 3 carriers that offer truly traditional long-term care policies today. A lot of the carriers have gotten out of that market, if you will, and they offer what we call is a hybrid policy. So if it's a hybrid in the sense it's either a life-based policy or an annuity-based policy, and then it will have a long-term care rider attached to that. If they at some point in time need to receive care, they go into an assisted living facility and then maybe into a nursing home. The policy will then help pay for those expenses, and it will draw off of the base of that policy, either the life or the annuity. But it has a lot of flexibility in it, because if you would happen to pass away in your sleep, never use a day of that policy for long-term care services, then it works and acts like the life policy or like an annuity policy. So in a sense, you're getting something, for out of it versus potentially not getting anything at all. And I'll give you an example of that. My grandparents had a century farm, just a little bit of history, and this is kind of one of the reasons why I got into insurance. They had a century farm, and between the two of them, they spent 10 years in a nursing home facility. This was in the 90s, and they were in their 80s, and it was just, and long-term care was not an option for them, long-term care insurance. So they lost their century farm due to going on Medicaid and the expense of the nursing home facilities. When my parents saw that, they rushed out in the 90s and purchased long-term care policies, traditional long-term care policies. My mom still has her policy today, and I tell her, if you can't afford those premiums, I will pay it for you.
Right. Yes.
That policy. And it was great. I mean, it's a really rich product. It has lifetime benefits. So she could be in a nursing home for, the rest of her life, and it will continue to pay some sort of benefit. My father, though, unfortunately, he passed away suddenly and never used a day of the benefits. So that all the premium that he's paid in, and there was nothing left for him. So if it was a hybrid type policy, then it would have turned into a life policy that he could have then passed on to his beneficiaries. So that's kind of the difference between the two. There's a lot of, again, flexibilities with designing a long-term care policy. We look at a lot of factors that go into designing that long-term care policy, looking at the client's current health, what kind of coverage they have in place already, what's their budget, and then we design a plan that fits their needs. So if it's, some want to go that traditional long-term care route, which is great. Some like to go to the hybrid, type policy as well. And then there's also short-term policies. So there's tons of options out there. I could go on and on.
Yeah. Well, I mean, I think your company name is so appropriate, Meaningful Insurance Solutions. There are all of these options out there available. And so you can really help people fine tune what it is that they specifically need and what is going to be the best match for them.
Correct.
Yeah, that's great. Yeah. So it sounds like there are certain parameters or requirements that people would need to meet in order to get or qualify for a long-term care insurance policy.
Yes, so they have to, there's activities of daily living. So that is dressing, eating, bathing, transferring. So those are some examples of the activities of daily living. If they fail to perform 2 of the 6 activities of daily living, or they have a cognitive impairment and the doctor approves that this is going to be longer than a 90-day time period, then the policy would be kicked in. So then that's when, you'd work with a care coordinator, and they would then set up that, the plan for them, and how the policy would start to pay. Most clients then have an elimination period, we call that. It's a 90-day on average waiting period. So once you are deemed by your doctor that you cannot perform 2 of those 6 ADLs, or you have a cognitive impairment, then the clock, in a sense, starts ticking. So you have a 90-day waiting period, and then the benefits would kick in. Some policies have a shorter waiting period, but that's really, again, the flexibility of designing the plan to fit their needs.
So it sounds like, as a family member, like if I'm the daughter, the spouse, and I am unsure of the policy's terms, it's a good idea to first just ask someone, do you have long-term care insurance? And then hopefully you can get a copy of the policy so that you can read through the terms.
Correct. Yeah, you can read through the language within the policy. Also contacting the insurance carrier.
Okay.
It can be of help as well. There's also there's various different care facilities that will have social workers or individuals there that can help and assist in reading that language as well. There's advocates out there too that help as individuals are making that transition, and they can help them again read that language, make sure that they the policy is going to start paying out benefits the proper way. So I guess I would also add that you want to make sure that you have a power of attorney, and if your loved ones are you think in the near future they're going to be needing care, they have a policy in place, it's good to review that at this point in time and get the proper legal side of it set up so that as a daughter, you can then reach out to those insurance companies and they will allow you to speak on the client's behalf. So.
That's so smart. So what is it that we are looking for when we're thinking about the terms of the policy? You mentioned that the policies have evolved to cover different aspects of long-term care, which is anything within that ecosystem of caring for seniors. So maybe, or someone, maybe care in the home, or so what are we hoping for that policy is going to cover, or like how much, or how does that work?
So there's a few things we look at. First off, the cost of care. We can look at a cost of care calculator of what the current costs for a nursing home, assisted living, as well as home care services today. Mm-hmm. And on average, an individual will start going on claim around 82 years of age. So you can also have some projections out to see what that cost would be here in the future for care. So first off, you look at the costs in their area, and that's specific to their state, even in their area, and you want to make sure that you are getting them a good idea of what that will be in the future. And then you basically want to look at the daily benefit amount, again, how much they can afford for a benefit period. In a benefit amount, that would be great to take that in consideration, as well as then inflation. So if you're talking to somebody that's in their 60s, and if they're not going to go on claim based on statistics until their 80s, you may design a policy right now that might not meet, and pay for all the expenses or a good portion of those expenses, and based on how it's designed today. But adding a 3% or a 5% inflation to that policy, then we'll have those benefits grow compound each year. So you look at the inflation, you want to make sure too that it has flexibility, that it covers all levels of care as well. So there's just a lot of things that you take into consideration. And if you have someone who is living in a rural area, do they have family member that can come and check on them? Do they have the resources that can keep them at home as long as possible? Or is really the nursing home in the close town the only resource, that has assisted living in a nursing home? So there's a lot of factors that you want to take into consideration on designing that for them.
That's great. That's really good information. So then when we are looking to activate the policy, we're thinking, okay, things just don't seem to be going very well. I feel like we could use some assistance with some in-home care. Maybe they'd have some medical needs that could be handled at home. So then we're looking for like how much coverage for the daily rate. Is that the right language around that?
Yeah. So you would want to look at, some carriers, and so many difference within the industry, but some carriers have benefits that are paid monthly. So they'll say, based on the amount of time that you're receiving care, here is how much is going to be paid out. If you're receiving care 3 days a week, if you're receiving care 5 days a week or 5 times a week, then that's it's going to be based on that, and it's going to pay out on a monthly basis, or they may pay out based on a daily amount. So it's really kind of designing, seeing what works for them within the plan. And then also the plan can also pay for informal and formal type of caregiving in the home as well. So,
Okay. So what does informal mean?
so that would be anything like non-medical, and it could even be a loved one. So if it is a daughter that is caregiving, then they can help, pay for the expenses of them maybe missing work, and taking them, to the store, to the doctor's appointments, and just caring for them. That would help pay for them, to be their informal caregiver.
Okay. So it sounds like long-term care insurance can cover both a family member or a professional in that caregiver role. So that's
Mhm.
the informal or formal caregiver. And then it's possible to be reimbursed for time for non-medical needs in addition to like medical care. So those non-medical needs would be things like running those errands or cooking a meal, things like that.
Yep.
Okay.
And
Well,
and also even if they need to make adjustments in their home, putting in a ramp, putting in railings, it will help cover those types of expenses too. Ultimately, we know that individuals want to stay at home as long as possible before.
what is the biggest frustration or red flag right now that people are saying that long-term care insurance does not cover? That everyone's like, boy, I sure wish it would cover that, but it just doesn't.
Oh, that's a good question. I mean, I could have told you that a few years ago.
Yeah.
They really made it so flexible that it's quite accommodating, you know, and they're really there to adjust and, like I said, just take on any type of care. So,
Yeah.
but I really
Who
try to
oh,
find a solution for the client.
that's great. I mean, it sounds like there's a lot of options. So it's like almost cooking a meal, like you're pulling in all of these different ingredients to create your masterpiece.
Right.
Who should be considering long-term care insurance? Like, how old should we be when we start to think about this?
So that's a good question. Where we're seeing the most of the clients that are applying for long-term care insurance is in their 60s.
Mm,
But the younger you are, the lower the premium it would be. So ideally, if you're in your 40s, 50s, you know, that's definitely kind of more of the sweet spot. However, I'm not saying that a 6-year-old cannot get insurance. Is this going to be a little bit more expensive than if you were in your 40s or 50s? Also take into consideration underwriting. So you have to go through health questions. They look at your medical records. If you're over a certain age, 65, they might do, a cognitive phone interview, face-to-face type interview. So there's a lot more underwriting as you get older, and then the premium is a little bit higher too. So I picked up my own personal policy when I was 36 years old. So
36.
yes.
Oh my gosh.
So yeah, I picked up a traditional policy. They did not have hybrids back then.
Okay.
So I have that. My premium has gone up a little bit, but it's definitely really affordable at this point in time. I also, this is one of the other things I wanted to point out. So I have a 90-day waiting period with my long-term care policy. So again, I start to go on claim, I have to wait 90 days until the benefits kick in. I picked up a short-term policy that
Mm-hmm.
is a 0-day waiting period, and it will go 180 days benefit. So it will fill in the gap while I am waiting for my traditional policy to kick in. So
So, can you have two policies? Is that okay or
yeah, you
legal?
can have multiple policies. So
Okay.
you just need to take into consideration like what the current benefit amount is on an existing policy and take that. If you're going to get another traditional policy, then you need to make sure that you stay within the parameters of the how much of a payout you could get each day or each month based on that traditional. But you could have a traditional policy and a hybrid, or you could have a traditional and a short-term policy. So
in that, you've said 90-day waiting period a few times. I have an idea of what that means, but can you elaborate a little bit on what that means for me financially, or what that looks like?
Right. So, for an example, there's a carrier that offers, a calendar day elimination period. So if your doctor advises you that you do need care, you need to start receiving care in a nursing home, assisted living, or at home, the clock, in a sense, starts on that day. So then it goes 90 days until the benefits of the policy will kick in.
Okay.
There are other carriers that offer a 90-day elimination period as well, but it's based on service days. So if you're only receiving service or care 2 times a week, then only those 2 times a week would count towards that 90-day waiting period.
So by the end of a 4-week month, only 8 days will have counted.
Right.
Okay, that seems like something to be really closely paying attention to.
Exactly. So you definitely want to pay attention to that. The more favorable is going with, of course, the calendar day, because if you're receiving care or not on a given day, that day counts towards your 90 days of waiting until the benefits kick in. So definitely, that's a huge factor. Some people will go with maybe a 30-day waiting period if it is based on service days versus calendar day. So that's definitely an option. On average, when we look at the waiting period of 90 days, and that's what most people pick up, when they design a policy, they want a 90-day waiting period. In today's day and age, 90 days of service equates to about $12,000. So just knowing that you need about that amount of money to pay out of pocket before your benefits would kick in.
Okay, so yeah, I guess that's literally the bottom line, is just knowing that with a long-term care insurance policy, you still need that fund set aside with maybe $12,000 to $15,000 available, so that before it actually engages and starts reimbursing you for care, you're paying out of pocket. Do they do they go back and pay back any of that money?
I know of one company that does, and they offer a hybrid policy, and they do that. But there's only one carrier that does that. So that's why I picked up personally that short-term policy. I have a short-term care policy, and it starts paying benefits on day 1, which is great. So it's going to help pay for those expenses while my traditional policy is waiting to satisfy that 90-day waiting period. So.
What have I not asked you? Like, what are some of the things when you're going through this with people, and information that you want to be sure that people have that maybe I have not asked or we haven't touched on? What are those things?
Including family members, and making sure that, when you're talking to an individual that's in their 60s, that are their children on board with this? Having a meeting with the family members is very important, so that they all know. The biggest takeaway, and I think people need to realize, is that long-term care is not only beneficial to, of course, the policyholder. However, it can provide great peace of mind to the children and to the grandchildren, the caregivers or potential caregivers, giving them that peace of mind that they can come and see you and be a part of your life and help out and care some, but also still be able to balance work in their lives and know that have the proper benefits in place and that you're going to receive the care that you need. I jokingly say, to some of my friends that, do you want your child to care for you? Do you, be
Oh
that
no, that's code for wipe your butt.
right? And it really puts that in perspective. They
Mhm.
think, no, I really don't want that. So um, that's something that people need to incorporating the family, making sure that they are aware, that they know that they're picking up this type of policy is key. So that's one of the main factors.
I love that. I love that you included or suggest that people include family in it because these are real conversations and actual scenarios that do play themselves out. And when we are not on the same page, it causes so much strain and chaos within the family. I was speaking on Sunday and I shared with the audience that two main, the biggest factors are making those decisions about what needs to be done and then making the decision on the time frame or timeline that those things need to be done. And it just feels like having that long-term care insurance helps eliminate some of those big hard decisions because it's already in place. Like we already have the plan.
Mhm. Definitely. Yeah. So it does. And if there's any questions beforehand, of course, being prepared and making sure that you yourself, as well as the care, your children understand how the policy works is, another key factor. So,
I know in our family, we were, um, both of my in-laws thankfully had long-term care insurance. And they also had railroad retirement and she had a school pension. And so ultimately, they were able to cash flow with all of those benefits, the memory care that she lived in and the assisted living that he lived in.
that is wonderful.
I mean, it really was such a great piece of their legacy to our family to have been prepared and taken action to take those steps to not just, protect their financial legacy to the family, but also really just ensure the quality of our relationships as their care needs increase. I just think that's such a big part of this.
Right. And another factor is divorce. You have two individuals that go through a divorce, and I think they immediately look at what can I help minimize and of expenses. Well, canceling your long-term care insurance, it should never be an option. And look at it as it's for your children, not really for yourself. Um, so don't, if you go through a divorce, make sure that you find a way to budget and keep that policy, active for sure.
And just the other side of that coin is when you go through a divorce, be sure you have long-term care insurance because now we have one less potential person as a care partner for you.
Yep.
And heaven to Betsy, I am not saying do not get divorced, y'all. That is not the messaging here. You do you. You have to do what's best for you and your family and your future and your life. And it's really just we're talking about being prepared.
Mhm.
Yeah.
Definitely. Yes. So,
Okay, well, any final thoughts for our listeners? These are women just like you and me. They are launching kids and caring for parents and trying to figure all of these things out. Any words of wisdom, final words of wisdom you'd like to share?
well, I would like to say that they know and they're experiencing and they're living through right now being that caregiver. And if you have the moment, I would love to talk with them about personally long-term care insurance for themselves so that they can prepare for their future, um, and help, you know, change this, of the process of, their kids going to take care of them. And, so I would love to work with them as they know and they've experienced it, caring for their loved ones. So having the proper insurance in place is key for themselves as they go forward. And You can always contact me at my website. It's misomaha.com. I'm based here in Omaha, Nebraska. So misomaha.com. And my phone number is 402-319-1638.
402-319
1638.
1638. Great. I will add those into the show notes for sure. What states do you cover or work in?
So I'm in about 11 states right now, but that's continuing to grow. Nebraska, Iowa, South Dakota, Colorado, Texas, California, Florida, Georgia, Missouri. So
Okay, all right. So it's
Illinois.
more than Nebraska. So
Right.
definitely reach out and see if she's able to help you in your state where you live.
Definitely.
I think this has been a really helpful conversation. I think we've cleared up quite a bit of questions that I know people have. And I'm really grateful for your time. Thank you for being here today.
Thank you. And I hope it was helpful. And if you have further questions, I'm happy to walk through that and show you some illustrations and how the plans work and talk further. So thank you for having me.
You bet. Thanks.